Hello and welcome to Weekend Investing Daily Bites. We are shooting episode 337. Today is 20th of January, and after a while, we are doing a Ask Weekend Investing Round, round number 30. So we've done 29 rounds before this, answered hundreds of questions, and we'll take some more today. But first, a reminder that the Wild program is on. All subscribers would who have completed 1, 2, or 3 plus years with any strategy on the annual plan can take these discounts on the renewal. So 20, 25, and 30% discounts are applicable in the three slabs. You can also use these discounts for taking on any new strategy to make a bouquet of strategies. The format of the discount is here, and as well as you can see the details of this on a on our weekend investing hub, or you can just write in if you have any confusion about this. But don't let this go by. Use this offer. Nifty remained in this confusion zone, I'll call it, 17,800 to 18,250. It is spending more and more time in this zone. It's been more than a month now since we've been here. We are following the US markets to some extent in terms of choppiness. There also the S&P 500 has not been able to break out of the trend line, and the previous night it collapsed just after touching the trend line. I was hoping this morning that budget uh, being not so far away, we may have a small rally to 18,500 maybe. That hope seems to be belied for now. Until now, we cross over 18,200 or so. The bears will have an upper hand in the markets. As you can see, large stocks in consumption, FMCG, metals, pharma, real estate commodities took a beating in along with infra. Excuse me. Bank Nifty was the only redeeming sector, with private as well as PSU banks in the green. Public sector enterprises also doing all right today. Again, broader indices, all of them between 0.38 to 0.65% down. So no respite anywhere. Nifty down 0.4%, Nifty next 50 down 0.38%, and others a bit more. In terms of the weekend investing strategies, only Nifty next 50 10 gained 0.6%. India top 10 also gained 0.17%. MI20 and MI Evergreen were in the green. The rest all were pretty much in line with the markets. Today's heat map, you can see a big sell off on Hindustan levers that probably drove most of the index down at minus 4%. More royalties to the parent company. These kind of events are not penciled in terms of analysts expectations, and hence are always a surprise. Asian paints also not coming out with the growth people were expecting. I mean, if you are at 60 70 times earnings and you show a 6% growth, market definitely will not like that. But of course, many of these stocks get invested only because of their huge name and quality branding. So the buy at any price syndrome that is going on in the market, it's called the BAP syndrome. That will not work all the time. Bajaj Finance also down 2.5%. There will come a point in every stocks move where the narrative will not be able to overpower the earnings and the valuations. We've seen this in domestic markets, we've seen this in international markets, when we saw Tesla and all the Zoom and ARC and big names falling down, because at the end of the day, you need earnings from stocks. And momentum helps in a way that even when the narrative is not telling you to exit, but the price is falling, you will be able to exit the stock. And that's what helps in numerous cases that we have seen, whether it was Laura Slabs, whether it was Tata Elxsi, whether it was uh, uh, Deepak Fertilizer, Deepak Nitrite, alkylamine. I can rattle off 50s and hundreds of stocks where we were able to book good profits, get out, and then of course come in again if the rally starts. Uh, Not being tied down to any narrative or any stock or any expectation of earnings is also a very big feature of your investing in from when you see it from my point of view. To be entrapped in a narrative is already having a lot of uh, bondage to those narratives, which is not easy to get up. I mean, imagine buying something at 100 rupees, it goes to 200, now it is at 150. You will not want to get out, because you've seen 200 and now your narrative is saying it can go to 400, but the price is coming down. What will you do? You have to wait, or somebody may convince you to get out for some other better stock. That may happen, but that's what all ad hoc basis. So sometimes you'll make a lot of money, sometimes you'll lose a lot of money. If that is the kind of uh, trajectory of your portfolio that you like to see, then of course that's all good. So let's start with the questions. Financial Guruji, our favorite patron who always asks questions. When will small case release? So in the first line itself, my answer is I don't know, because I cannot talk on behalf of small case, but nevertheless we'll read the question. Returns showing actual returns we made net of all expenses. I don't think small case will ever be able to show this, because every person's expense is different. Every broker has different expenses. Small case will not be able to do this. I don't think so. XIRR on a portfolio level. It's high time that they are looked into, else many people like me have to leave the platform due to no visibility of returns that we are making. The leaving of the platform is obviously your decision. I mean, nobody can stop you from doing that. But XIRR on overall portfolio is something that is possible to do. I don't deny that. That is possible to do. This suggestion is already there uh, with the small case team. As and when they will do it, whether they will do it or not, I really cannot question. But if you are sort of giving a ultimatum that you do this, otherwise I leave the platform, that of course decision is yours. Pratyush has the next one. Neither your team nor small case team could give me a satisfactory response. I invested 1.07 lakhs, current value is 1 lakh. MI20. How is total return showing plus 7,000? I have not withdrawn anything till now. Is this a system error in small case? So let me clear this, Pratyush, that the total returns for the way small case calculates is current returns plus realized returns plus dividends. So from your date of investment, and I'm assuming that you've invested once and not in SIPs, because if you've invested in SIPs, then the complication is even more. But all the trades in which you have already booked the position is not showing in the current value. uh, so the total returns is something that is more, one should be looking at the total returns only. Current returns is only because of the what is happening to your current invested stocks. So let's say you bought 20 stocks and 5 were sold and 5 new ones have come in. So the 5 that were sold, whether they were sold in profit or loss, those returns are not showing in the current value. So we have created a manual explaining this entire total returns, current returns, so on and so forth. So please go through the FAQ. It is available on the website. I'll also ask my team to put it in the description if possible. But this is something that is very clear. There is no issue about it. Additionally, when you have brought in money into SIPs, the only good way to calculate returns is the XIRR, which of course will come once you've completed 1 year. So there is no error anywhere. It is just a matter of interpretation of the definitions being used. Current value may seem indicative of your current portfolio, but current value is only calculating the value of your uh, holdings currently and not including dividends and realized returns. So I hope this matter gets laid to rest. Next question. We seem to be having a problem getting to the next question. Okay, sorry about this. Vijay says, what's your take on investing 50% in Nifty Momentum Index and 50% in Nifty Low Volatility for more than 15 years? I think you should look at how it has performed in the last 4, 5, 10 years, this combination. I have not, uh, checked how this combination would have performed. But if your test comes out with good results, no harm in doing this, not at all. Financial Guruji has another one. Some managers have already started offering single subscriptions to multiple small cases. This becomes really affordable for people who are subscribed to multiple small cases. When can we expect similar offering from Weekend Investing? This will be a bigger game changer than Wild. So, as far as I know, only those managers who have a legacy understanding with small case are offering such subscriptions. It is not available to all managers. We have approached small case. This is not available to us. As and when it will be available to us, we will definitely consider it. Next one is from Vijay. Oh, is this a repeat? Sorry, this is a repeat. Kiran Khedkar has a next one. First image is kite application, second image is small case application. Both images are showing different percentage profit or loss every time. Why? So kite is showing you minus 0.5%, small case is showing you minus 4%. There is all kinds of possibilities why this would be happening. Number one would be that kite sometimes will not be adjusting your stocks for any bonus dividends splits. So kite uh, profit or loss may be wrong because of that. Second reason, because see, kite is showing you better results than small case. So there is something wrong in either kite calculation or the small case calculation. So small case calculation also uh, could be off because it is not including your expenses. So from that perspective, kite result should have been worse off. So I don't like to depend upon kite, profit and loss for my calculation, because kite is extremely error prone when it comes to this, to the back office calculations. I mean, they are extremely good in terms of keeping a tab on what you bought, what you sold, so on and so forth. But to do that actual calculation, there can be errors. So from that perspective, I mean, neither the dividends are calculated in kite, nor all these special corporate actions are incorporated. So I would suggest that you send a mail with all details to the small case team and let them investigate. But my suggestion is that you continue to monitor your XIRR in small case and not worry about what is showing in kite. The only thing that you need to worry about in kite is that the balance of your stocks should be in tally with what is showing in your small case portfolio. Those should be in balance. I mean, it should not happen that small case is showing you have 100 stocks of Reliance and kite has 90. That should not happen. But profit and loss, I don't think you need to see at both places. Next one is from Mr. Bhupender Singh. In my experience as subscriber of NNF 10 from October 21, most of the gains are being lost before rebalancing And in some cases, we have even recorded losses despite 25-30% gain. My question is, how often do you review the exit rules for the product? So we will not change the strategy because a season of some losses or some stocks going from positive to negative territory happens, because this is the nature of the, see, you have to understand, this is the nature of the strategy. When we have tested it for 12 years and running it for now almost 5 or 6 years, uh, we have no loss of confidence if there are 3-4 months or 6 months of strategy not doing well. The market is in such a situation where it's just dilly dallying since the last 15 months. So if we have, and let me also go see what has happened in uh, NNF10, just for my clarity also. So let's go to the hub. uh, in the last 1 year, let's see. NNF10. NNF10 in the financial year has done 7.6% versus 1.8% on the Nifty Next 50. So in the last 9 months, at least I can say Nifty Next 50 has done extremely well. Okay, let's also see other quarterly returns. Let's go to quarterly returns. NNF10, let's see last 4 quarters. So quarter four we did 3% versus minus 2%. So quarter four of 22 was really good, almost 6% gain. Quarter one was minus 11.9 versus 11.2, in line. Quarter two was 22.95 versus 16, another 7% gain. And quarter three was zero point 0.9 versus 0.47. So till December, we have taken care of here, and the current month is running. So I see no reason absolutely why anybody should be not happy with the NNF10 results. Let's come back to the recording. So what I would suggest is that don't worry about individual stock performance, because what we need to see is the overall portfolio performance, and I've shown you how the portfolio has performed. So don't worry about all these things. This is nature of the strategy. We can't have the cake and eat it too, right? So if something is going from 25 to 50%, we want that, but if something is going from 25% to 0, we don't want that. So we can't have it both ways. That's my answer. Paul is asking the next question. What is the essential difference in behavior between absolute momentum and rotational momentum strategies in a normal market situation? Which would work better? Given a choice, which one would you recommend? The post COVID momentum was a freak situation, I feel. So, very good question, Paul. My take on this is that both have very different behaviors at different times, and there is no one right answer that I can prescribe here. So, in absolute momentum, just for the sake of revision for those who do not know, absolute momentum goes to cash once the market starts to fall and rebuilds the portfolio as the market comes back up. In rotational momentum, we never go to cash, but the stocks basically churn and go to the strongest amongst the weakest, amongst all the weak stocks, you can say. So, if all stocks are falling, it will still go to the stocks where the least damage is done. So in normal market situation, uh, I mean, first of all, there is really no concept of a normal market situation. What we are seeing is normalcy. Every 2 years have a 10-15% dip. Every 6-7 years have a 30-40-50% dip. That is normal. That has been normal for the last couple of decades. So what happens is, in deep crisis, like we see in COVID, like we saw in 2008, like we also saw in 2015 to some extent, is that stocks will go to cash, the portfolio will go to cash, market continues to go down, so you are gaining ground there, and when the market turns, the new leaders of the next rally get built on in the absolute momentum strategy, and they are able to outperform from there. So absolute momentum strategy will gain when there is strong momentum, and when that strong momentum is coming out of a a deep market crisis, that is when absolute momentum will really do very well. In rotational momentum, when the market goes through a crisis, rotational momentum strategies will also go through a crisis because they don't go to cash. So, they will bleed with the market. So, if Nifty goes down 40%, most likely they will also go down 40%. But then, as the market comes back up, they churn into stronger and stronger stocks and they lead the way. What has happened in the last 1 year, for instance, is that absolute momentum strategies got chopped around many times, but they were never able to deploy the cash back. And especially the deployment of cash is always with a lag. So it requires longer trends, more consistent and stronger trends to really uh, make use of it. So that does come around every other year. This year has been a bit more choppy, and that is why absolute momentum strategies have uh, lagged the rotational momentum strategies. I would not recommend one over the other, but currently rotational momentum strategies are doing better. That's all I would like to say on this. Next question is from him. Why do prominent investment managers, considering momentum investing does not have them, and have momentum investing has survivorship bias, and hide the data in pretext of backtesting, how to understand their interpretation? So I think my suggestion here is, please go to the prominent investment manager and ask your question, that why did you not learn about momentum investing at all. And with the broken learning that one has, you cannot put a paintbrush on a momentum investing strategy just because you don't understand it. So there is no survivorship bias issue here. We have been running momentum strategies for in public domain since 6 years, 7 years almost now. So I mean, to say that it is all backtest and nothing is happening in the reality is all humbug. Uh, the thumb actually is in the performance, and I don't think I have to compare performance to anybody to show that thumb. So let's not get into he said that and you said that. This is my view, that momentum investing beats all other formats of investing very, very convincingly. There have been hundreds of years of research on it. There is no question about it. So I don't have to listen to anybody's broken knowledge about momentum investing, whether it is survivorship bias or back testing or this or that. So all the best to all managers, but it's best if they preach about their own style and perform in that style. Bhupender has the next one. Is it possible that we get details of the entire entry price and date of each stock within a product when we subscribe it? For example, some of them run for 100 200%, and when the exit rule is triggered, the new subscriber might book a loss of 20 30%. But so this is another uh, you know myth, I would say, that a person who comes in late in the market cycle will not make money. So it does not matter. I mean, let's say stocks started from 100, now we are at 200. It may go to 500, it may go to 210 and drop down. But the question is that from your point of entry, or from that date of entry, everybody will make the same percentage profit or loss from that moment onwards. So it does not matter if somebody is sitting on 100% profit. They came in that market cycle point. If you wish, you can wait for that market cycle point if you want to time the market. But nobody knows how the market will play out. Last 2 years, people have been calling that market should go down to 12,000 and so on and so forth. It has not happened. So don't worry about all this. The whole idea of weekend investing strategies is to not have this micromanagement of per stock basis and on a timing basis. Just gradually invest and you will see that your money will get made. And I'm running that long term SIP strategy since 14 months now, and it is showing you results that even in a flat market, the SIP XIRR is reasonably good, and that is because it's been able to take the gyrations of the market into account when it is allocating more and more funds. So my humble request is that do not get into the very nitty gritty of the strategy. If you wish, you can wait for timing the market. When you see that a drawdown of 10, 15, 20% has come, you can deploy your money there if you like, but that is not the whole idea of the weekend investing products. Vikas has the next one. Very realistic explanation. However, I have a question that sometimes good stocks falls quite a bit before a massive run up. So in your case, you will drop it when it falls and thereby losing the run up it will generate later on. Yes, it may be possible that we will lose a stock when it drops, and when it goes up, we may not have a slot open to get back into into that stock, or our algo may miss it totally. So yes, it is possible. These are the realities of a non-discretionary system. Uh, as they say, you cannot be at every party in the town. So as long as overall results are getting made, I mean, I don't care whether it was that stock, A stock or B stock or C stock that made the gain. But yes, I mean, there will be stocks that will run up after we exited. There will be stocks that we got a loss in it, and then they ran up, and there will be stocks that we entered very early and they became multi-baggers. So all kinds of things will happen. We have to take that with a pinch of salt, that this is the nature of the beast that we are riding. Divya Saurav has the next one. What is your take on shifting capital from mutual funds to only small cases as a single mode of equity? I am invested in Nifty 10, 20, 35, top 10, and four other mutual funds, considering news of issues in various AMCs of late under investigation. So it is a personal choice, Divya. I would think that with your experience with the three weekend investing strategies, and I would think that you would have experienced for the maybe a 6 months or a year. If not, then you can wait for some time, because once I would like you to have confidence over what you're doing here with weekend investing strategies. Once you have that confidence, you know what is happening in these strategies, how stocks are going out, how stocks are coming in, how you perform when markets drop, how you perform when markets are going on. You will not ask me this question basically. You would basically just shift. A lot of our users are shifting money from mutual funds to small caps because they feel empowered, they feel that they are in control. uh, Results may be better, so many things. But again, it's a personal choice. A mutual fund is a feel it, shut it, forget it type of you know instrument. Some people like that, some people don't even want to do that one click every week or every month. So it is a personal choice, but uh, is the main ingredient of this shift should happen. Where are you feeling more confident, where are you generating more returns, which gives you more sense of security? That should answer your question. Next one. Hi, look, being a momentum strategy, why has MI25 not participated in the latest banks and rail stocks rally? Also missed the fertilizer rally and book losses in it. So MI25, uh, although it's a small cap strategy, it requires high liquidity in the stocks that it follows. So a lot of these small cap stocks also run up but have very less liquidity, and we don't go into low liquidity stocks because then you will start getting a lot of slippage. So it will require robust small caps with high liquidity to get in and get out. It may miss some stocks, it may miss some rallies. The past, we have been running MI25 since 2016. So it is not that it has not performed. Yes, because of absolute momentum nature, it has remained somewhat in cash this year, and the whiplashes in the market has caused some underperformance there. But I'm not any. I don't have any sense of any worry about MI25. Uh, It did, I believe, participate in some banks, but yes, a lot of the banks, when they started their rallies, were on very poor volumes, and that's probably why MI25 missed them. DJ has the next one. Excuse me. As per momentum investing, a rising stock continues to rise and investors will ride the wave. Shouldn't incremental investment for MI also mirror this approach? That is, we invest where when the portfolio is in upswing. Using SIP strategy seems to be counterintuitive. So, very good question, Mr. DJ. Uh, Ideally, what you're saying is absolutely right. You should be investing when the portfolio is in upswing, when stocks are in upswing. Uh, but what happens is that for simplicity sake, we don't want to be having a discretionary view about timing of your investment. Uh, as a independent investor, you could do and invest more every time maybe the index of the strategy goes above, let's say, its moving average. We give you all the data. I mean, all the index data is available. So MI25, a daily data point is available, and it is there for a download from uh, uh, Weekend Investing Hub also. So you can plot that, you can plot it against a moving average, and whenever you find that the trend is going up, you can do invest more in that. So that is one way of uh, putting more intelligence into additional increments. But my own sense is that it will not make any meaningful difference. Please do a study like this. In case you do find there is a lot of difference, we will certainly do a daily bite or a study on it. But I don't think there is so much because a lot of times stocks do a correction enough so that you can get more of them, but they don't breach the exit policy. So stock which starts at 100 goes to 120, comes back to 105, goes to 140. I mean, that is the natural movement it has, and and by sipping into that portfolio, you are to some extent getting some advantage of that natural move also. Also, of course, there will be times when it will just fall through, so that few sips that went into it additionally go waste in a way. But then, as I said, you can't have the cake and eat it too. So some things better be left to chance, and if you find that by imposing that trend overlay, you are able to better the decisions, or go for it. I think that's a good option. Sarath has the next one. I am a weekend investing user for Evergreen and MTallcap. MIMT is not performing well, but I think staying vested for 2 3 years would give good returns. I totally agree with you. I'm curious to know if weekend investing tweaks the algorithm once in a while for its strategies when they don't perform well. So no, we don't do any tweaking. The same strategies run from day one till currently, whether it is weekend investing strategies, whether even it is stairs, the same strategy is running. Yes, in stairs we tweaked the position sizing last year, but the strategy remains the same. And in weekend investing also, I mean, there's no position sizing change at all. So we have done no change because fundamentally there is no change. I mean, markets don't change at the frequency at which we are doing a rebalance, which is a weekly or a monthly frequency. No change is required. If we were doing some high frequency algorithm at 30 seconds, 1 minute, 2 minutes, their tweaks are required because different algorithms are competing for that same tick margin, and a lot of tweaking may be required if humongous number of people come here. But on a weekly time frame, on a monthly time frame, no tweaking is required. It has I admit that MIMT all cap has not done well. It has done very well in the past, and I will definitely hope that it will continue to do well in the future also. But there are lull moments in every strategy. So take it with that pinch of salt here. But your outlook is very good. That 2 to 3 years you want to stay with it, so that the next momentum move can be made good use of. All of these absolute momentum strategies have not done so well this year, primarily because being in cash and being in a choppy market, relative momentum has done better this year. So my suggestion is also that have a mix of both strategies in your bouquet. If you have only absolute momentum, please add some rotational momentum strategies. If you have only rotational, please add some absolute momentum strategies. They will give you a very good cross diversification also. Siddharth says, what will be the broad effect of global recession situation on the mid and small cap sector in the India market? I wish I knew. Uh, all I can say is that everybody knows that recession is coming. Market knows recession is coming. Every expert worth their salt is saying recession is coming. Indian market is still at within 5% of its all-time high. That gives me the answer that you know as of now there doesn't seem to be too much of worries on that front. When things are known, when you know that a flood is coming, and yet uh, somebody is sitting peacefully in their house, they have made preparation, and that is not going to impact it. But yes, at the last minute when it does hit, then what kind of repercussions happen at that time, nobody can call that out in advance. But I would have imagined that we would have gone far lower given the outcry of recession that is there in the global markets. But it has not happened. So I believe that the market is telling us that it is well prepared for these eventualities. But yes, some hit is definitely possible. And in the markets, especially when we are looking it from this momentum investing point of view, we are trying to not have a narrative in our mind. We are trying to not do a prejudged call, time the market. We are allowing the market to take its own course. Yes, we may lose some money for some time. We'll make it up more than that in some other time. So I don't think I subscribe to that thesis of trying to call the market. Because okay, let's say I told you that mid and small cap will get hit. What will you do? Will you just sit in cash till somebody will come and tell you that yes, the recession is done? By that time stocks will be double from where they are. It is very, very difficult to time. At least I cannot do it. So sorry, I didn't have a good answer to your question, but that's how my thought process goes. Sarath has the last one. What should my return expectations from all the weekend investing strategies be? Very good question. So, number one, I cannot, by rules, give you any expectation. I cannot give you any assurance. I cannot give you any guarantees. That is the SEBI rule. Number two, you should look at past performance. You should look at how each strategy has done in live environment also. Even if you don't want to take the backtest environment, see it in the live environment, how the strategies have performed in the live environment versus each other, versus the benchmarks, versus other comparable instruments. And that should give you confidence with strategies and how to go about it. My own sense is that given that we are in a reasonably high inflation, sticky inflation environment, uh, and given the performance that we have seen in the past, I am pretty confident that we will, be somewhere around the benchmarks or a bit better than that. That is my expectation. I, of course, cannot assure you on that, but the way some strategies had performed in the last 6 years, I have no doubt that we will continue to, deliver the expectations from our products. So, with that note, I think we are at the end of uh, round 30 of Ask Weekend Investing. This was a long one, 40 minutes almost. I don't think I've done a 40-minute Ask Weekend Investing before. So, thank you so much for all your questions. I hope I've been able to answer them. If not, please do send us a mail. We will make sure that all your queries get resolved to your full satisfaction. There is no doubt about it. That is why we keep holding all these Ask Weekend Investing rounds. That is why we have a robust support system. That is why we have FAQs. That is why we have a lot of. While we are here, let me show you. What is the kind of uh, knowledge base that has been built at Weekend Investing. So weekendinvesting.com, if you go to support, uh, besides the Ask Weekend Investing support, facts and user manuals, you could basically search this entire database. You want to know about rebalance, you'll get all the blog posts about rebalance on it. Or if you want to know about, let's say, SIPs, or maybe partial exit. So we've built some sort of intelligence into this, where immediately you can go to the relevant fact, you can do a keyword search. So a lot of times you will not even need to come to our email, because a lot of the answers, FAQ booklets, user manuals are already here. So just go through them. I think these are extremely good uh, uh, resources. A lot of queries have been answered here. Then you also have user manuals. Uh, our team really has built a lot of uh, uh, knowledge base around various themes. Sometimes I feel we have more FAQs and help articles than the small case platform itself. But nevertheless, combining the resources of small case and combining the weekend investing support system, I think this is a very, very robust ecosystem we have built for answering each and every question. And despite all that, if there is any question in your mind that continues to be not answered, please write an email to me, please write an email to support. We will make sure that we answer your query. With that, I come to an end to this Ask Weekend Investing Round. Thank you so much. Bye.